Aditya wants to gift a car to his parents with some amount from his savings and some amount by taking loan to buy a car. So he thought of visiting a finance company which provides him the loan. Aditya visited Shriram Finance for his car loan, but by that time Shriram Finance is in short of liquid cash as they have given passenger vehicle, commercial vehicle loans to many other people. There are many other people approaching Shriram Finance for auto loans, but the company is helpless as they don't have immediate cash. An employee who is an MBA finance graduate working in Shriram Finance came up with a solution from the concept called securitization, which happened long back in US. He requested to arrange a meet with CEO to explain him the idea.
Hello Krishna, I heard that you have an idea regarding the illiquidity problem that we are facing right now.
Yes, sir. During my MBA days, I came across a term called securitization and studied more about it as I felt interesting. In 1970s, the US government came up with this concept called securitization when the banks were out of cash to give mortgage loans to its customers. To increase liquidity in market, the US government asked all the banks to pool its existing loans and sell them to a government-backed entity. This entity issues securities to the investors and the money raised through this will be given to bank to provide further loans.
Okay, wait, as we provide only auto loans, how this is applicable to our current problem?
Sir, there as it is home loans, it is called as mortgage-backed securities. And here for auto loans, we can apply the same process and it is called as asset-backed securities.
I am a bit confused. Can you please explain this process in detail?
Sure, sir. First, we have to pool all our existing loans and as an originator, we are the one who should transfer these illiquid assets to SPV or SPE.
Wait, what do you mean by SPV? How does it work? And what is the role of SPV in this whole process?
Sir, SPV is a special purpose vehicle or special purpose entity which is formed with an object of managing the whole securitization process. Once we transfer our illiquid assets to this SPV, it creates securities out of it and issues them to investors who are interested. It is the link between originator and investor and responsible for holding assets once after the transfer is done from our side.
Okay, but is there any procedure that SPV needs to follow before issuing these securities to investors?
Sir, once the asset transfer is done from our side, this SPV approaches a credit rating agency like CRISIL, Fitch, where they are responsible for evaluating the quality of assets and creating securities out of it. Depending on the default risk, credit history, and various factors, they are classified into AAA bonds, AA bonds, BBB bonds, etc. And once this process is done, SPV will issue these tradable securities to the investors who are expecting high returns from their investments.
Okay, but how do we get that money from investors?
The SPV collects all the money from the investment done by investors and will pass those funds to us.
Okay, how do the investors get their coupon payments regularly?
Our obligors pay us monthly EMIs, right? Here obligor means debtor who borrowed loan from us. So as an administrator, it's our responsibility to pass these monthly payments to SPV and in return the SPV will pay this amount to investors as their return.
Can an individual like you and me become an investor in this process?
In India, not everyone can participate in securitization process. Only qualified institutional investors like mutual funds, insurance companies, provident fund and institutional investors can participate.
That's great, but what if the borrower defaults in repaying his loan? Is it not a risk to an investor?
Sir, there are some strict rules to be followed by us. We have to submit our borrower's historical collection data to credit rating agency for their assessment and also we have to provide regular information to investor on ongoing reports about the performance of the loans.
Great Krishna, this process works well by creating immediate liquidity and frees our locked capital by liquidating assets wherein we get the lent funds much before maturity.
Not only that, sir, but it also helps us to remove loans from balance sheet as these loans are securitized which are then sold to investors to gain a new source of funding, thus helping us to issue more loans. This also acts as an effective tool of risk management since we transfer all our risk to SVP by selling these loan assets to them.
Is there any risk associated to investors in this process?
They can face the loss from prepayment. If the borrowers pay off their debt early, there is an early return of principal, or there could be a reduction in interest income if the borrower makes larger payments to pay the mortgage down more quickly. Prepayment risk is typically highest when interest rates are falling. It leads owners to refinance their mortgages. Investors face the risk of having low future interest payments generated from these underlying assets.
So knowing all this, do investors invest in this type of securities?
Yes, sir. Securitization offers great choice to investors as these debts are divided into different levels with different ratings, thus letting investors to invest as per their risk appetite, allowing them to diversify their investment.
That's a great deal to investors, right? Do we have any regulatory bodies or regulations so that the process can run smoothly?
Special purpose vehicle entities are required to get themselves registered as a NBFC. Also, debenture trustees who act as a link between the issuer company and debenture holders are responsible for securing the rights of holders and they must be regulated by RBI with a minimum net worth of 2 crore.
Okay, let's proceed with this process and make all the necessary arrangements for its implementation. Let me know if you need any approvals from my side.
Thanks for giving your valuable time, sir.
Thank you.